Hi traders, this is Gomathi Shankar. How did the stock market perform in the year 2023? Starting with the Hindenburg report against the Adani group of companies, and then the war between Israel and Hamas, and then the merger of HDFC Bank and HDFC, Geo Financial Services listing in stock exchange, BJP winning in 3 states, and then Nifty hitting all-time high 21,000. So how was it for the investors and for the stock market? Let us have a brief view. In 2023 Jan first 3 weeks was slightly sluggish for the stock market. However, in the last week of January, Hindenburg reported a lot of fraudulent activities against the Adani group of companies, and that led to crash in Adani group of companies. Now this report not only crashed the Adani group of companies, but it also shook the Indian market as well as the world markets. And right from that point, our stock market was on fire and it was having a lot of volatility each and every month. So finally, in the year 2023, Nifty has closed with 20% returns. It was opening around 18,131 and finally it closed around 21,731, which has provided 20% returns for all the investors of Nifty. On the other hand, Sensex, which was quoting around 60,871 in the month of January, finally ended up at 72,240 with 18.7% returns for the entire year. Now, if we look at the equity market, large cap funds has delivered 23% returns, and whereas mid cap and small cap has outperformed the large cap funds. Mid cap has provided 38% returns, which is greater than 18% comparing with Nifty, and small cap fund has provided 42% returns, which is more than 22% returns comparing with Nifty, and flexi cap fund, which is basically large cap, mid cap and small cap fund combination, flexi cap fund has provided 28% returns, and this is still 8% higher than the Nifty returns. Now, if anybody has invested in large cap funds or small cap or mid cap or flexi cap, they would have beaten the Nifty returns. And even a conservative investor who has invested in Nifty Bs, ETFs or in index funds will still be seated with a comfortable 20% returns. Now let us look at some detail points. When we compare the Indian market along with the global markets, Nasdaq has provided 44% returns and S&P 500 has provided 24% returns, which is greater than 4%. And Japan market has provided 20% returns similar to that of Nifty. Dow has provided 14% returns, which is lesser than the Nifty returns. Now, if we compare the Indian market along with the Asian markets, we can see Nifty as well as Japan's market has performed well among the Asian countries. Now, the interesting point here is most of the fund managers are very happy with the 2023 market because mid cap and small cap has beaten the large cap funds, and most of the fund managers are very happy looking at mid cap and small cap space outperforming the large cap ones. Take a closer look with Nifty. Nifty has been moved majorly by 5 stocks, which is Tata Motors, Bajaj Auto, NTPC, L&T and Coal India. Now, if you look at the percentage delivered by these stocks, Tata Motors was quoting around 390 rupees and finally it closed around 779 with a whooping 101% returns. Bajaj Auto, which was quoting around 3617, was closed around 6833, which is around 88% returns, and NTPC has delivered 87% returns, L&T with 69%, Coal India with 67% returns. So these 5 stocks have given huge returns for all their investors. And among this Nifty 50 companies, only two companies has delivered a negative returns, and that is Adani Enterprises delivered negative returns of 26% and UPL has delivered a negative returns of 18%. We all know very well that Adani Enterprises did not perform well majorly because of this Hindenburg issue. Now, if we have a closer look at each and every sector, almost every sector has outperformed the Nifty except metal industry. IT has outperformed Nifty, energy, auto, FMCG, pharma. Realty space has delivered 18%, 80% returns for the year 2023. The only sector which did not beat Nifty returns is metal sector. Metal has provided only 17.8% returns for its investors. Now I would like to talk about CPSEs, which is called as Central Public Sector Enterprises. These central government companies has given a massive return for all the investors, and this has been the talk of the town in the Dalal Street. Rural Electric Corporation, which was trading around 117 in the month of January, was closing around 412, which has delivered 254% returns for all the investors. And Power Finance Corporation, which was quoting around 113, has closed around 382, which has delivered 69% returns for all the investors. And Bell, Bharat Heavy Electricals, has trading around 79 rupees in the month of January, and it has closed around 193 with 69% returns for all their investors. Now, more importantly, all the central government companies have delivered more than 50% returns. Most of the central government companies like IOC, HPCL, GAIL, Coal India, and Power Grid, ONGC, these all the central government companies have almost delivered more than 50% returns, and along with this, they have given a very good dividend for the previous year 2023. Now let us talk about the IPO in 2023. Almost 57 to 59 companies have launched their IPO, and among those companies, 45 companies has given more than 10% returns. In that 45 companies, 22 companies has given more than 50% returns for their IPO investors, and close to 9 companies has given more than 100% for all their IPO investors. So the year 2023 has been positive for IPO companies also. In the year 2021, we got 63 IPOs, which was the highest till date. And in the year 2023, we saw 59 IPOs, and this is the second largest year for IPO companies. Now, because of the positive impact for the IPOs in the year 2023, this year 2024 also, we are expecting a lot of IPOs lined up. In this IPO space, let us talk about few IPOs. IREDA, which was issuing at 32 rupees, was now trading around 104 rupees, and it has given 227% returns for their IPO investors. And Cient DLM Limited, which was launching around 265 rupees in the IPO, is now quoting around 675 rupees, which has provided almost 154% returns for all the IPO investors. And then Signature E Global, which was issuing around 385, is now trading around 920 rupees, which is closer to 139% returns. And the very famous IPO, which was much expected in the year 2023, was Tata Technologies IPO. Tata Group has been launching the IPO almost after 20 years, and this IPO was issued around 500 rupees, and now currently Tata Technologies are trading around 1180 rupees, and it has delivered almost 136% returns for the investors. I would like to talk about Adani Group of companies and their percentage returns. Now, most of the Adani Group of companies has delivered a negative return. Among that, Adani Total Gas has delivered almost 73% negative returns for their investors, and Adani Energy is the second company which has delivered 59% negative returns among the Adani Group of companies. So these two top the table in Adani Group which has delivered negative returns for their investors. And then there comes two companies of Adani which has delivered a good returns, namely Adani Power, which has given 76% returns for their investors, and Adani Port has delivered 27% returns for their investors. Now, so far we looked at the positives of 2023, how the market performed in the year 2023. So we saw the equity market, large cap, mid cap and small cap space providing very good returns for the investors. And we saw a few companies like Tata Motors, Coal India, L&T, which has provided very good returns for their investors. And we also saw about the CPSEs, and they have provided more than 100-200% returns, namely Rural Electric Corporation, Power Finance Corporation, and they have also given good dividends for their investors. And we saw the IPO space, and then we talked about the Adani group of companies. Now, the lesson to be learned from this year 2023 is, now the past year in 2022, Nifty delivered almost closer to 4% returns only. So people would have thought that FD is better than investing in stock market. But if you look at this year 2023, Nifty has delivered 20% returns in a single year. Now Nifty touched 20,000 for the very first time in the year 2023, and very soon Nifty reached 21,000 for the very first time. So market is at all-time high. So what we should learn from this 2023 is we should start investing in stock market. Apart from the traditional investments like FD, RD, gold and real estate, we should understand that the potential of Indian market is huge in coming years. So we should definitely allocate some capital for the equity markets. Now let us discuss about the 2024 market outlook. Now recently I was looking at the news from Economic Times telling that every leap year is a depressing year for stock market, because most of the stock market crashes has happened in the leap years only. Now Economic Times have studied the past 10 leap years, and what they are telling is 1992 was a leap year and there was a crash in that year, and 2000, 2008 and 2020. All these years are leap years, and stock market crash has been witnessed in these leap years. And stock market has given negative returns or less than 8% returns in these leap years. Now 2024 is also a leap year. So is there a crash awaiting? This is the news which I was reading in Economic Times. So you can also go through this article, or you can just explore how stock market performed in the leap years. Now there are 5 big events lined up in this year 2024. So both traders and investors should be very careful in these dates. So the first big event is interim budget, which will be in February 1, 2024. And the second mega event is Lok Sabha election, which is coming on April-May 2024, which is basically the Prime Minister election. And then there will be a full year budget in the month of July. And then there will be a mega event for all the global markets, which is the US elections. US presidential election is scheduled for November 2024. So US market is considered to be the mother of all the markets. Every global markets will be looking at the US markets. They will be eagerly waiting for who is going to be the next president of the US. So this is a mega event. So both investors and traders should be very careful in these time periods. And the final important event is RBI monetary policy event. So this happens once in 2 months. So this is a regular event. So this will not be having a much bigger impact. Unless you are an experienced trader, you should definitely not step into the market during these mega events. Now let us look at how stock market will be in 2024 based on our CPR methods. So what I would do is I would open Nifty daily chart with monthly CPR. Now if we look at 2023, 7 months Nifty was trading above monthly CPR. In the month of November and in the month of December, Nifty was trading above monthly CPR. So basically if Nifty is trading above monthly CPR, you can look for bullish trades, and if the prices are below monthly CPR, you can basically look for bearish trades. As a trader, whenever Nifty is below monthly CPR, I will look for short opportunities. Now you can have a look at the month of October. Nifty has given a fall below monthly S1 and even till monthly S2 levels, and in the month of March, Nifty has given a fall up to monthly S1 levels, and in the month of January and February also, Nifty has given a fall up to monthly S1 levels. So basically, as a trader, if the prices are below monthly CPR, I will look for short opportunities, and if the prices are above monthly CPR, I will look for long opportunities. Now, from an investor perspective, what I would suggest is, whenever you see Nifty touching monthly S1 or monthly S2, it is a golden opportunity for you to do shopping in stock market. You can purchase stocks under Nifty 50 at cheapest prices, because whenever Nifty is trading around monthly S1 or monthly S2, most of the top weighted companies in Nifty or most of the companies in Nifty 50 will be trading at the similar monthly S1 or S2 levels. So you can start investing in those companies by studying their fundamentals and financials, and then you can start investing because they will be available at much cheaper prices. Now, if you look at the stock market in December 2023, stock market was around 21,800 levels. So now people will be jumping into investing and they will be buying companies at an expensive price. Most of the companies in stock market right now are at expensive prices. So whenever Nifty is above monthly R1 or whenever Nifty is above monthly R2, that is not the right time to invest. If you are an existing investor, you can just accumulate around monthly CPR levels. Don't accumulate around monthly R1 or monthly R2. Alright. So whenever Nifty reaches monthly CPR, it is time for accumulating more shares of Nifty 50 companies. And whenever Nifty is at monthly S1 or monthly S2, you can purchase more companies or you can start your fresh investing journey by investing in Nifty 50 companies. If you are not good at fundamental analysis or if you are not good at reading companies' financials, then better you can invest in Nifty 50 itself through Nifty B's ETF, or you can invest through mutual funds in index funds. Alright, so this is my perspective for 2024. So let us be optimistic. I will be optimistic. As far as monthly CPR is not broken down, our market is bullish and our market is very good for reaching 25,000 levels as well. Alright, so I am optimistic. As far as monthly CPR is not broken, I am bullish on our markets. So whenever Nifty is at monthly CPR or whenever Nifty is going to come towards S1 or S2, rather than expecting a crash, it's a time for investing. Alright, so this is my view for 2024 using monthly CPR as a trader's perspective as well as a investor's perspective. I hope this video is useful for you. Share it to your friends. If you have any queries, you can post it in the comment section. Together we grow as a price action trading community. Bye.